So a little over a month ago now, the government sat down with the Greens and in less than 48 hours, they ended a retirement strategy that has been around since 2007. And they did it with no consultation and no warning, just a deal done over a weekend. And if you're watching this, you have generally got a couple of weeks left because every SMSF trustee in Australia has until the 10th of August to either act or lose the option for good. And here is the part that is going to make you angry. The government's own numbers say that this change affects less than 1% of residential borrowing in this entire country. It raises $50 million over 4 years, which in budget terms is basically nothing. So if it is not about housing affordability and it is not about the money, what is it actually about? Stick with me because by the end of this video, you will know exactly what changed, whether it affects you, and if it does, what you need to do in a couple of weeks you have left to protect yourself. And I'm not a financial advisor, and this isn't personal advice. It is general information so you understand what is happening and know what questions to ask your own advisor. So right, let's get into it. So here is what happened. On the 23rd of June, Anthony Albanese and Jim Chalmers agreed to Green's amendment as the price for getting their broader tax bill through the Senate. The amendment bans SMSFs from taking out a new limited resource borrowing arrangement, an LRBA, to buy residential property. It went from announcement to a law in about 3 days, which for anyone who has watched how slowly super law usually moves is generally unheard of. The bill received royal assent on the 26th of June and the ban commences 45 days later, which lands on Monday the 10th of August 2026. And I want to be really specific here because the details matter. It is not the settlement that has to happen by that date, it is the contract. So if you exchange contracts before the 10th of August, even if settlement happens in October or November, you are protected. But if you haven't got a contract signed by then, the door is closed. Now the Greens sold this as closing a loophole for wealthy property investors gaming the system. And I get why that sounds fair on the surface. But the ATO's own data tells a completely different story. And it is worth sitting with for a second. LRBAs are most commonly used by SMSF with balance between $500,000 and $1 million. That is not ultra wealthy. That is a couple in their 40s or 50s who have worked really hard, built up a decent super balance, and used the one legal tool available to them to buy a single property inside their super fund and built a bit more security for retirement. SMSF specialists also have pointed out this strategy is commonly used by women coming out of a divorce, using the super to secure a property they can actually live in later. Because after a relationship breaks down, that is often the only pathway back into the property they've got left. So when you hear closing a loophole for the wealthy, what is actually happening is a tool that has been helping everyday Australians build a retirement security for 19 years just got taken off the table for a policy change that the Treasurer himself admits raises $50 million and affects under 1% of residential lending in the whole country. If you are watching this and you're not sure whether your situation is affected, that is exactly the kind of thing we walk through on a call. Primepest Properties helps SMSF trustees work out where they stand and what their options actually are before a deadline like this hits. Link is in the description. It costs you nothing to have the conversation. Now, before you panic, let's talk about what doesn't change, because this is where a lot of fear online is overblown. If you already have an LRBA in place for a residential property, you are completely unaffected. Fully grandfathered, no action needed. You can even refinance that existing loan down the track, it stays protected. If your SMSF already owns a residential property outright with no borrowing, nothing changes for you either. And if you're looking at a commercial property, an office, a warehouse, a business premises, none of that is touched by this at all, because the new rule only applies to a property that isn't classified as business real property. So this isn't really the end of SMSF property investing altogether. It is more the end of one specific pathway for one specific type of asset from one specific date. And once you get your head around that distinction, the whole thing gets a lot less scary. If you're currently in the process of buying a residential property through your SMSF using an LRBA, here is what actually matters right now. First thing, speak to your SMSF advisor and your lender this week, because we are not talking about a month anymore. We are talking about just over 2 weeks from when this video goes live. And when a similar policy was floated back in 2019, all four major banks pulled their SMSF lending products before the law even passed. So the real risk here isn't just a legal deadline, it is the banks getting nervous and closing the door even earlier than that. Second, if you don't already have an SMSF and a bare trust set up, that needs to happen fast because you need the structure in place before you can even get finance approved. And the third, this is the one people get wrong. It is the exchange of contracts that has to happen before the 10th of August, not the settlement. So the real question isn't, can I settle in time? It is, can I get finance approved and contract exchanged in the next 2 to 3 weeks? That is generally tight. But if you're already close to the finish line, it is still doable. You can't afford to sit on it. And if the timeline just doesn't work for you, you're not locked out of SMSF property altogether. You can still buy residential property inside your SMSF. You will just need to fund the full purchase price in cash rather than borrowing, which obviously require a bigger balance and reduces your funds diversification. Or if commercial property fits your situation, that pathway stays open, completely open with borrowing still available. Neither of those is necessarily worse, they are just different. And which one makes sense depends entirely on where your fund is right now. Now, this whole thing sits inside a bigger story that a lot of us are living through right now. It is taking the average Australian somewhere between 10 and 12 years to save a 20% deposit today, when a decade ago it was more like 5 to 6 years, because property prices have grown so much faster than income. And every time a legitimate pathway to building wealth for retirement gets closed off for everyday people, not for the wealthy, it makes that gap even harder to close. That's why I think it is worth understanding exactly what is happening here rather than just reacting to the headlines. So know your actual deadline, know whether you are protected or not, and if you are not sure, get advice now rather than waiting until the last few days before the 10th, because every SMSF advisor and lender in the country is going to be flat out by then. So to bring it all together, the ban starts Monday the 10th of August 2026, and if you have already got an LRBA, you are fully protected. No action needed. If you are mid-process, remember the finish line is exchanging contracts, not settling. And if you are still deciding, the time to have that conversation is this week, because you generally don't have a month up your sleeve anymore. You've got a couple of weeks. And if you want to talk through where you actually stand, book a call with us at primepace.com.au/contact us. The link is below. And if this video helped you make sense of what is actually happening, hit subscribe, because there's a lot more changing in property and super this year. And I will keep breaking it down the same way, plain English, no spin, and I will see you in the next one.